What can we expect next from gold and silver prices? Well, I have an expert here with me at the Beaver Creek Precious Metals Summit. He is Chen Lin. He is the founder of ChenPix.com. Chen, thank you so much for joining us here at battling the natural elements, rain, wind, bees.
Thank you, Daniela, for inviting me.
So
it has been a pleasure.
You know, I was happy. We met back in May in New York. We were on a panel together that I was moderating, and May was a different time than now. And I remember I was so surprised that the rest of the panelists were still so bearish on gold, but you believed in gold even back in May when it was depressed and no one wanted to touch the metal.
Well, so far so good.
So far so good, right?
Yeah. Until the past few days, there has been straight bull market. I'm very bullish of gold since the end of last year, when because of my background, I spent more than 30 years in the United States, but I originally came from China. So I understand Chinese culture, have contacts in China. So at the end of last year, I feel the United States and China are going to go to a trade war. There's very little chance of compromise.
So that's interesting. Do you feel that it was really the trade war that fueled the rally in gold?
Yeah,
more than the Fed, more than other factors?
Well, if you look at it, without the trade war, United States was on the, it has been rising inflation, the unemployment was going down, and then last year the thesis was they go to $1,000. That you remember the talk, because people think U.S. dollar going to break out above 100, and then all the commodity will be hammered. So that was the thesis. But when the trade war happened, okay, what I see, that's my point of view, is that China will be hurt much more than United States, but United States will be hurt as well. So United States will slow down, and biggest beneficial of the trade war will be Europe, will be Brazil, will be all the other countries on the other side.
And why do you think that gold will rally in that environment? Is it because people are seeking that safe haven?
That's one of the reasons. Another reason would be the U.S. dollar cannot go up like last year, which it didn't, because if, for example, the rest of the world doing a little bit better, right now Brazil actually doing great because they are buying the cheap soybean from United States and sell all the soybean they produce to China at much higher markup.
Chen, let me ask you this. Do you think that President Trump will do everything in his power to resolve the trade war before the next election?
Yes, I think he's trying very hard he's pushing China extremely hard, try to push them into a corner, so they have to resolve the trade dispute. China has been actually quite resilient. Look at this is hot out of the press. I got contact this week that China quietly set the condition they want the Pete Navarro to be fired. That's this week. I look at this and say, well, can it be possible?
That's the inside scoop you're hearing.
That's what I'm hearing from China.
Wow. What kind of a game changer would that be?
Right. So I think both sides has unrealistic expectations.
Right.
So until one way to end it is both countries get into recession.
Let's bring it back to gold here. You were, like I said, bullish back in May. Where does it go from here? Where could you see it headed?
All right, gold has a sharp pullback in the past week, especially because China seems to changing the tone a little bit. So they're trying to see, they say, oh, we want to reach a deal. Partially because Trump jack up the tariff actually hurt China. China trying to see, their strategy is to drag. They want to drag into 2020, see who the Democratic candidate will be, and then see what's the best deal they can get. So China kind of a little bit soft in tone, but what I see is on the key issue, China probably very unlikely to yield. So you look at it right now, it's the mid of September, and then in late September, China, United States will start to have a phone conversation preparing for the October meeting. So if you look at the calendar, these things could explode in the next few weeks. So if gold can hold up around about 1450, maybe 1480, this could be still, you look at the charts, it's a good base for the next leg up.
Chen, in your portfolio, you've taken a leveraged positions on gold with futures. So do you think increasing the risk profile of gold by leveraging defeats the purpose of trading gold as a safe haven hedge vehicle, or perhaps the mainstream view on gold is wrong?
That's a very good question. For investment perspective, right? Gold is moved 10%. And move a lot of gold, change a lot of picture of a gold stock margin, but for your investment, just increase 10% is quite small. So I tend to be, when I'm very passionate about something, I put money where my mouth is. So last December, I told my subscriber just buy gold as much as I can, and silver and the platinum future. I own all these futures, and they're doing fantastically. When silver hit $20, that's my initial target. Platinum hit 1,000. That's a week ago. I sold some, sold some. So I'm kind of waiting for them to cool down so I can rebuild my position.
But how about silver? Would you be buying more silver at this price?
Silver, I'm looking at the 1750 area. That would be a crucial support because every breakout, they always retest the breakout point, which is about 1750 area. So we're very close to it. Sometimes I'm thinking maybe I should buy it, just get a position because it could explode to the upside.
How do you feel about the gold stocks right now? Are you surprised they haven't performed better, that they've been lagging so far behind physical gold?
It's gold stock, gold producer have been doing well, especially unhedged gold producer, because some gold producer has a hedge book. The juniors are not doing well, especially the company who need money. So investor, because the general market is so bad, especially small cap. So gold junior happen to fall into that category. So investor just sit back, say, oh, after you raise your money, I'll see you later. So this kind of mindset.
What companies are you liking right now? Can you give us some picks from Chen's picks?
Thank you. I like unhedged producer right now, especially gold went up so much in June and July. So the gold producer with no hedge book will be the biggest beneficiary. Among my list is gold is Prytian, and the silver is Coeur d'Alene. Coeur d'Alene also has a lot of gold and silver, but both they are not hedged. So Coeur d'Alene actually has a little bit of a problem with Silvertip. They start to turn around the corner, but because they are not hedged, last quarter their margin is about 19%. This quarter they can double that because of the rise of gold and silver.
Do you look for those depressed stocks? Do you seek those?
Depressed depend. A lot of times, if it's down, if they need to dilute, maybe have a living lower. I learned my lesson in the past decade.
The hard way sometimes.
The hard way, exactly. So sometimes it's better to ride with the rising tide instead of just bottom fishing, hoping to hit a big one.
All right. Chen Lin, so much wise advice. Thank you so much for joining us. You can learn more about Chen from his website, chenpicks.com. I hope to be on more panels with you, and I hope to see you soon. Enjoy the conference.
Thank you.
And thank you for watching. We will have much more for you. We're just starting our coverage here from the Beaver Creek Precious Metals Summit, so be sure to stay tuned to Kitco.com. Thanks, Chen.